Hello there, and welcome to this video where we'll talk about the Illustrator VWAP package, how to use these different indicators, and also how the Illustrator approach and concept around the VWAPs is different than from other VWAP indicators that are out there. First of all, the VWAP stands for volume weighted average price. This is mainly about understanding the concept of execution cost from a institutional perspective, because a major challenge for them is to minimize market impact when submitting orders. So obviously their order books are huge, and the last thing they want to do is to move the market when they execute. So positions are divided into many smaller orders, and they use market value as determined by the VWAP in order to obtain the best possible price. All right, so let's have a look at what this is and how to use it. The VWAP is a volume-weighted arithmetical mean of all transactions that take place in a defined period. So here we have a daily VWAP, and it's anchored at the beginning of the session here. Basically, you can calculate this for all instruments as long as you have price and volume data. And as I said, it's anchored at the start of the session. I have anchored it here at the start of the full session. You can also anchor it over here, over at the beginning at the regular session. This is the regular session. You see the session breaks over here. And here at Illustrator, we think it makes most sense to anchor it at the start of the full session, because the VWAP really needs to put on some weight in order to be a meaningful price benchmark. So also the volume differences from the full session here to the regular session for most instruments is so large that it doesn't really matter that you start anchoring it over here. You will just be able to start using it at a much earlier stage if you do that. So that's our recommendation. So as I said, the calculation starts with the first transaction of the current trading day, and it ends over here at the last transaction prior to close. We have a red staple line here marking the VWAP when the price is moving below the VWAP. You see it's blue here for 2 short periods when the price was moving above the VWAP. The VWAP line is blue. And then we have this first standard deviation area here marking what we say is value or market value, the value area. This is where statistically some 70% of all transactions during the day will take place. And so if you're looking for setups in this area, you're likely to be trading together with institutional traders, and they are the ones that are moving the market. So if you're looking for setups within this value area, it will be easier to spot setups with favorable risk reward ratios. So in a downtrend like this, we're looking to sell when the price is retracing back into the VWAP area. This is where, as I said, institutional traders are likely to participate. They want to execute as close as possible to this area, also because that's for the institutional traders what determines their bonuses. So if they can get VWAP execution or better than VWAP, they will get higher bonuses. So some very real reasons to pay attention to this price benchmark here. So we're selling at these retracements into the VWAP, and then we're looking for exits towards the second standard deviation band. Statistically, this is where only 5% of transactions will close outside this area. So this is very much a oversold scenario down here. And a really neat thing about this indicator is that it also plots previous VWAP levels. So as a default setting, we have entered yesterday's VWAP level, that of 2 days ago and that of 3 days ago. And what we see here is that the market reacts to these levels as areas of support and resistance. We see here at the beginning of the night session, prices coming in from below to a previous VWAP level, the one from 3 days ago, testing this as resistance here, and then failing, both tests rolling over, coming down here for support, testing for support again, breaking through to the downside, and then down here, the VWAP level of 2 days ago, finding support down here, then breaking to the downside of that level, coming in from below, resistance, failing again, and then, as I said, into this second standard deviation area of the daily VWAP. So these VWAP levels are important meeting points for institutional buyers and sellers, mainly because these levels are objective and the same for everyone. It doesn't matter what time frame or chart or bar type that you use. These levels are the same for everyone. So a lot of dormant higher time frame orders will be parked in these areas. So it's very important that you're positioned in such a way that you have the odds in your favor when you're looking at these. And that basically means that you're looking to buy support and sell resistance. All right, so as I said, we also have weekly VWAP levels. Weekly VWAP will start here at the beginning of the week, and you should then wait, I'd say 2 days until you use it. So here we have the first day, second day, and then here at the outset of the third day, we have some testing of the VWAP level of 2 weeks ago for support, and at the same time we see we're at the oversold area of the weekly VWAP. So this is what we could call a outside in trade. So we're going from the outside into the VWAP. The other possibility would be to be trading from inside out, and so that would be in this level. So you would be going from the inside to the outside. That's the classical approach. Here we see 2 times testing, 3 times testing this previous week VWAP level on that of 2 weeks ago and 3 weeks ago, and then coming back into this area, overbought up here, retracing back in, and inside out up to the overbought area, then reverts back into the weekly VWAP, and then inside out again towards the end of the week. For the monthly VWAP, it's the same. We're anchored here at the beginning of the month, so you probably want to wait a week or so until you start using this. It's important that you let the VWAP accumulate and put on some weight before you start using it. So we see here we come into a oversold area. We have a reversion back into the mean, back into the VWAP, and then into overbought area, and then back in here, and a little bit of ranging action here. And you see this repeating itself again and again, and it's just a very, very important price benchmark, and very useful to define market value and oversold and overbought. Again, here we have previous VWAP level. This is where the VWAP level was 3 months ago. Here we have just started a new month. Here you see we're starting to draw the new month here, and therefore this prior month VWAP is exactly here. It's just extended right here, and so we know where this level is. the one from 2 months ago was here, and then you also want to pay attention to the prior month value area. So here is the value high and value low as defined by the first standard deviation band of the prior month VWAP here. And over here we see the value area of last month. So you just see this extension here. This becomes that of the VWAP of 2 months ago. And this extension here is then the value high and the value low over there. All right, so let's go into a chart here. I wanted to show some other features of this package that we have. Let's put on we're going to put on a rolling VWAP. A rolling VWAP is a moving window, so it's not anchored at a specific start of the session or start of the month or the week. We are just simply working with a rolling period of X days. So I have 3 set here as a default, but you can also put 5 or some other number that you want to work with. And we use this to define a value area, a rolling value area. I'm going to take off the mid bands here to make this a little bit easier to read. So we then have the same as before. We have first standard deviation and second and third standard deviation. And we also have these boxes here, and they are showing us where the rolling VWAP was 1 and 2 days ago. And that's useful to determine the momentum in the market. So you see here we're in a downtrend because the rolling VWAP of 1 day ago is below that of 2 days ago. So we have these steps here, and then coming in here we see a slowing of the momentum. You see these are fairly wide ranges here, and then the range is basically coming to a halt here, and then we see a powerful move in the other direction here, and the price is coming into the value area here. And so this is a good way to look at momentum and trend direction. I also wanted to show a way you can look at quarterly VWAPs. Then I'm going to change the data series. I'm going to put in 1,440 minutes. This is the equivalent to a daily chart. You cannot use or calculate the VWAP based on daily data, so you have to use minute data, which is the reason why I'm putting in 1,440. So we have also here in this package a way to calculate a quarterly VWAP. So we then use the listed trader and monthly VWAP, put that on here, and you can see here we can start and anchor it at the start of the quarter, bi-monthly, every half year, or every year. So you can add that to the chart, and then we see here beginning of the year, first quarter, second quarter. We're just now starting in the third quarter, and apart from that, we also, what we have up here is the ES. And if we're looking at something like the euro, for example, volume data is a lot of times unreliable or unavailable because there is no centralized exchange in charge of keeping track of the data. And So what you want to work with then is the range-weighted average price. So we have a different calculation here for Forex products because you don't necessarily want to rely on the volume data that's in there. So we had here the N monthly VWAP, but we can also use the N monthly range-weighted average price. So we put that in there. And the background for this is that volatility is roughly proportional to the square root of volume. So by calculating the weighted average using the squared ranges as the weighing factor, we can mirror the volume weighted average. And we've done some extensive testing of this, and it's very, very close to the volume weighted average. So it's a good way to simulate volume data if you don't have reliable information on the volume, as it needs to be a centralized exchange in order for it to be reliable. So for the index futures and commodity futures and bond futures, that's of course not really a problem. But for Forex products, we recommend using this range-weighted average price, which is a part of this indicator package. Of course, we also have the TVAP, time-weighted average, which is the original concept here. So we have then distributed the orders or the prices over a specific time window, and so that is a part of the TVAP is a part of this indicator package as well. All right, I think I have covered everything that's in this this extensive VWAP package here now. So we have current day, we have current month, we have current week. We also have the N monthly, so you can create quarterly, semi-annually, and annually VWAPs. And we also have the rolling VWAP calculations. So I think that's a wrap for this short little introduction video to the VWAP levels. I hope you enjoyed it. If you have any questions, head on over to the contact form over at listatrader.com, or you can also drop us a line at info@listatrader.com. Yeah, thanks for watching, and if you want to leave us a comment below here or share the video, that would be much appreciated as well. Thanks for watching, and see you soon. Take care.